Hey guys, we're back. Weekly options update. January's officially hate me. I'm wearing my green shirt just so we can hope for a green move. I have a feeling we're going to get it soon. Eventually, people are going to come in and buy this market. I'm also wearing this green shirt to see if my camera will have trouble with the green and if it pulls me out and I'll really be a floating head. But if you're new here, I go through my last week's trades, right? From Wednesday open of the previous week until Tuesday closed of this week, which was yesterday, if you're watching this on Wednesday. I share with you all the opens, closes, losses, rolls, everything. And officially, January hates me. A lot of you don't know, but last January as well, the market hated me as well. If we go back here to my records here, you'll see January. This was January 2021. I lost $6,881.53. Thankfully, was able to recover that. It took me a couple of months to recover from that, but we ended up the year clearing $20,332 for 2021. So what I'm hoping for is a repeat, right? Now, maybe I need to just avoid January's. I don't know. But I have a feeling that this market will get bought up fairly soon. At least that's the hope, right? This week, we've done some rolls. So it's definitely been a negative week as far as profits are concerned. Well, let's just go through it. So we're starting back on the 19th. I had a covered call on Workhorse that I bought back for a penny. So realized $32 there in profit. SoFi put, when they had that pop, I closed that out for 72 cents, realized 21.63, and that was because that I really don't want to be in single stocks too much, and SoFi was one that I didn't want to be in, and thankfully I got out of it because it went back down below the strike price again. So was able to get out of that. TUR, which is the Turkey ETF, closed that one out for 30 cents, so 29.50. Let me get rid of these fees because I hate looking at them and I always forget before I start recording. Makes it easier to know these numbers. I had another SoFi put that was a 12.50 strike, closed that for 33 cents, so $21.76 in profit there. Lemonade covered call. Here's a lesson. Well, no, not necessarily with Lemonade, but I'll talk about some of the other ones. Lemonade covered call was a 45 strike. Closed that one down for 65 cents, so 64.41 in profit there for in 10 days on that one. Fubo is the one that the lesson was taught on, right? I really wanted to get out of this stock. I think I did some last week too. Yeah, I did. If you don't believe in the company anymore, it's probably best to just exit out of the position, right? I could have exited out this position higher than what it's trading for now because it's trading for $9.88. At the time, it was $12.70. No, let's see, where was it? Fubo. It was $13.40. And I thought, okay, let me get out of this trade, right? So it was trading at $13.40. I was like, there's a couple days until Friday. Let me sell the $13.50 and get out of it that way. I really shouldn't have done that. I got greedy, and Fubo, rewarded me to drop to $9.88. So now I still own the shares. So now I'm actually in cost basis reduction mode, and I'm trying to actually get assigned more shares. So that's one of those lessons learned, especially in a stock like Fubo. You don't really want to mess around. But I'm in it now, and there's kind of no turning back for me. I'm gonna try to salvage it a little bit. But I exit that covered call for 16 cents, so $25 in 2 days on that one. Palantir, I sold 2 Palantir 1550s on the 18th for 52 cents. Closed them out for 45, made 11 bucks in 2 days, and then I resold the 16 out to February 18th, two of those for 87 cents, and I closed those out the same day for 62 cents, so made 48 bucks in the same day. SoFi, that one, which one was it? I think it was this 15 strike. Yes, it was the 15 strike that I closed. I rolled it actually to a 1350, collected $1.22, and then that day they popped, the second day I think it was, I exited that one for 88 cents, profited 32 bucks in the same day. Now here's one that I actually it actually didn't work out. I was trying to exit this, right, because the other ones didn't end up exiting because of a covered call, right? This was a put, and I was trying to exit this with a total loss, right? It would have been $320 of a total loss. Reason why is because Meta is definitely some high tech stocks, and I have quite a bit of exposure in that already in my ART-Ks and my TQQQs. So I really didn't want to take it, right? So I meant to close both of them, but I only ended up closing one. So I took assignment of 100 shares of Meta at 15 bucks, and then the other one I bought back for a loss. So that was a negative $160.86 trade. MSOS is probably going to end up being one that I probably should have took a loss on as well, completely, and just got out. But I didn't. I rolled it, and we'll talk about those when we look at the open positions. But I closed this one for 4 bucks, lost 191.26 there. And ART-K, if you guys remember ART-K, this thing started off as a 90, I think it was a 91 strike. I rolled it down to an 85 and a 69 or 64, I want to say. I took it, ART-K kept falling. So I ended up taking this and rolling it into a couple of 75 puts, and we'll talk about that later. But I bought those back, realized loss of 559.32. Now, Stone, covered call. Another one I could have exited higher, but I didn't. Sold a 16 covered call on Stone Company. Bought that back for 45 cents, so $27 in 3 days on that one. Kohl's, when they got the news of being bought out or a buyout offer, they popped up, closed that one down for 48 cents, so $50, 51 bucks there in 18 days. And then TQQQ, I rolled today, kind of almost timed it perfectly. So I bought those two 5750s back. This was a result from the split. I did only have one, but when it split, I got two contracts now. So I bought those back for $8.25, realized loss $14.26.32. So with all that carnage out of the way, let's look at what we opened. I will go down here to 119 or 120 is when I started. And that's that Palantir call I closed out in the same day. And there's that SoFi call I closed out in the same day that we already talked about. And there's Fubo. There's Fubo there. Here I'm selling puts, trying to be assigned. Sold an 11 for 53 cents. So I will let those shares be assigned. It will lower my cost basis, and I can probably start selling some decent puts on it. I mean, decent covered calls on it. So that one expires this Friday, and I got 53 bucks out of that one. Now here's that roll of ART-K. Rolled it from 85 to 75, so I was able to roll it from way in the money because it was an 85 strike, and ART-K was trading for, where is it now? It was trading for oh shoot, I don't remember now. Oh, it was trading for 71 bucks. I'm looking at the wrong thing. So it was $14 in the money. And the reason why I chose to double down was to get it closer to that strike price and become a little bit more manageable. So now I got two 75s, collected $7.10 on those, so a total of $1,419.45. In case Art K kept going down, I didn't want to be in that 85, because the further you get away, or the further in the money it is, the harder it becomes to roll. And I wanted to get close to this strike price, so at least I'm within spitting distance with a 75 strike. Yes, I doubled down with two contracts, but I think I'm going to be okay. Now here's those MSOS rolls. I rolled that 26 put out to a 24 and a 21. 26 was way in the money, but I'll probably just keep rolling these. Collected $1.40 and $3.10 on each of those. Stone finally sold a call out to February 18th at pretty much my cost basis. Collected $50 for that one. Palantir, I'm into cost basis reduction here and trying to be assigned some shares. So yesterday I sold two puts, a $10 strike and a $9 strike. Collected $46 and $29 for those. Those expire February 18th. And then Stone, trying to get into cost basis reduction again. So I sold a put that expires this Friday for a 13 strike, collected $25 on that one. And then Fubo, again, into trying to get assigned even more shares. I sold an $8 strike for $16, and there's the TQQ rolls. Interesting here, I was able to roll the 5750. Remember the 5750 I had? So I rolled it to the same date, but I rolled it to 5250, got $5.74, and to make up the difference, I sold the 40 out to March 18th and got $3.26. I think I'm fine. I doubled down on that one too, so now I got 4 contracts. But at the 2 at 40, I'm pretty confident in. If you look at a chart on the TQs, I think the Nasdaq gets bought up here very soon. If you look at it, we are looking at. Sorry, my phone is going off. Let me pause real quick. Okay, I'm back. If we look at long-term support, right, $40 here is probably a good sticking point. I don't expect it to get down that low. Like I said, I expect the Nasdaq to get bought up here pretty soon. I mean, it's almost like 14% down already, and I just think it's overdone. Let's see. Yeah, that's all the new open positions. So let's take a look at all the premium cooking. Now, with all the carnage, closed 15 positions, open 13, profit realized negative $1,972.56, but our premium sold covered that with $2,488 of premium sold. And the total premium cooking has ballooned with those rolls and the double downs to $6,690.09. Maintenance margin, a decent 27,500, just under 25% buying power usage. Cash balance, it went down a little bit because I got assigned those 100 shares of Meta ETF. So 112,026. No deposits, no withdrawals. Net liquidation really has gone down 110,900, and we'll look at the performance of that compared to the indexes here shortly. So return on maintenance margin, negative 8.32%, and that is the profit realized or lost divided by last week's maintenance margin. And then return on net lick, minus 1.68%, and that's the profit or loss realized divided by the previous week's net liquidation. Notional is off because of that insurance put, QQQ put that I put on last week. If you missed last week's video, you can see that. This is probably like $30,000 less or so. So a little heavy on notional, but I think it's manageable. Now let's see how the entire portfolio did overall. We'll look at the percentage decrease calculator. I started with 123,100, which is there in start of January, and I'm now down to 110,9. So that's a total of 9.9% decrease. Call it 10% down for the month. Not too bad when you look at the indexes. SPY's beating me a little bit by about 1%. I'm beating the NASDAQ by about 4% and beating the Russell by a couple. So overall, I guess you can say that's the bright light in the thing, right? But otherwise than that, we're looking for a bounce here. I mean, it's a little bit overdone, 10% down, 14% down, 12% down in the indexes is it's quite heavy. And, there's going to be, I think there's going to be people moving in on this. It's a good time too. So, that's all I got for you. Stay tuned for next week and we'll see if, anything's working out. You guys have a good week and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.